I'm going to tell you right now, do not hide things from your lender. They need to be able to have a full, clear picture of how much money you have coming in, what you're spending, what your credit is looking like. Do not try to hide anything from them, because I guarantee you, once they start digging, they will find it. We've had plenty of times where people try to move funds over, or try to change things over here, or try to park some money over here for a little while. I guarantee you, they're going to be going through your finances with a fine-tooth comb, and whatever things you tried to keep out or you tried to hide from them, essentially, they will find those things. Those things will come to light, and it's going to mess up the loan and cause you to not only lose out on the house you wanted, but also lose. Welcome to the Home Goals Podcast, the ultimate guide for turning your home goals into a reality. I'm your host, Derek Thornton. Join us as we navigate the twists and turns of obtaining a home. We'll be offering expert tips, helping you avoid pitfalls, and championing your journey towards that cherished place to call home. In this week's episode, we will be discussing how to prep for your first mortgage meeting. You've considered buying a house, you want to buy one, but you're really nervous about what the finances and everything like that are going to look like. This is likely one of the biggest purchases you've ever made in your life, and you're figuring out, what are the things that I need to be prepared for? Who do I talk to? How do I make sure that I don't make any mistakes? It can be a nerve-wracking process, right? Like looking at houses and getting to move in and all that stuff, that's the fun part. All the other stuff, applying for a loan and inspections and appraisals and all that stuff, that's the part that no one wants to wade through. That's the part that sucks about buying a house. But if you can make it through that, you will be much better prepared. And if you have everything in line and in order going into the process, it's going to make it run a lot smoother for you, so that you're not really stressed and biting your nails and worried all the way down until closing. And so I want to talk about just that initial meeting that you have with the lender, and some things that you need to be prepared to bring with you. Over the years, especially after 2020 and everything that happened that year, the way that we have these conversations has changed dramatically, right? It used to be when someone came into the office, I would often have my buyer consultation, and in the midst of that meeting, they could just walk right next door to our in-house lender, have a meeting with him, come back, talk to me, and then we'd have everything ready to go, right? A lot of things are done virtually nowadays. That almost never happens in today's market. I can't remember the last time I had a situation like that, right? A lot of times I will talk to buyers who will come to me with a pre-approval letter, or who come to me having had a conversation with the lender, and they might have waited until after they had that initial meeting before they ever even contact the realtor, right? And so I want you to be as prepared as you possibly can, so that you're not spending all your time trying to Google what do I need to bring into a lender, or what are they prepared for, and stuff like that, and getting terrified by whatever random horror stories you might find on Reddit about the process of the loan. Like, you do need to be careful and be mindful of those things, but I don't want you to go into it assuming that something's going to go wrong, assuming that the world's just going to cave in on you or anything like that. And so we're going to focus on some of the main things, or the more important things that you'll likely be requested or likely be asked to provide when you're going through the process of buying a home. First up, obviously, they're going to want to know your name and your birthday, your social. All those things are going to be important for them to know. Sometimes people are a little bit wary, as you should be, about giving out that pertinent or confidential information. That's to be understood. But if you want to get the most accurate information of what you're going to need to buy, that's going to be the way to do it, right? You could be vague and say, hey, I don't feel comfortable giving that information. I don't want to give any of that out. And that's okay. Just understand they're not going to be able to give you the best idea of what you qualify for, or what type of loan or rate or any of that stuff you can get, unless they get that confidential information, right? And so you want to make sure that you're working with someone who is reputable, that you know of. As a realtor, we always have recommendations of people that we work with, people that we trust, people who are familiar with the way that the process works and stuff like that too. You don't want to go through the process of just picking any random lender that you just come across and giving them all the information. And then also on top of that, you also don't want to assume that whoever you bank with is going to give you the best loan and give you the best service when it comes time for that loan. A lot of times people just assume, I'll bank with this person, I'll go with them, or I'll go with their company in order to get this mortgage loan, and they may not give you the best service. They may not have the best reputation in the marketplace, and that could hurt your offer with sellers as well. And so you want to know all those things, and the best way to get insight on that is by talking with your agent and getting recommendations for who they feel would be a good fit for you to be able to get that loan. So again, you're going to need to give that confidential information. If you've been renting prior to this point, they're likely going to request information from your landlord or whoever owned the property that you had been renting. Unfortunately, in most cases, there are some programs that you can kind of use to set it up, but in most cases, on-time rental payments mean absolutely nothing in terms of your credit score. That's something that it's definitely important for you to pay that on time, but fortunately, it really doesn't impact your credit score all too much. Where it really comes into play is if you have like an eviction on your past history or something like that, or if you've had judgments or liens against you as a result of unpaid rent. Those are the opportunities or times when it can really hurt you. But in most cases, you could pay your rent on time every single month, and it's really not going to have any type of impact on your credit score because, again, credit is all based on your debt. And this rent isn't considered a debt payment. Right. It is an obligation that you have to pay, but it's not a debt obligation. Right. But they'll still want to know your rental history to see if there's any red flags there. Next up, the next one is they're going to ask for your income info. They don't want to see your pay stubs. They want to see your tax returns, your W-2s. If you're self-employed, your 1099. They want to see all of those different documents to prove that you make the money that you're actually making. Now, one of the important things to keep in mind with that is that when they're looking at how much you make and whether or not you qualify for those loans and stuff like that. One of the key differences between getting a pre-qualification letter and a pre-approval letter is that pre-qualification is basically you and I had a discussion about what you make. You told me you make X, and I said, oh, based on that, you should qualify for this type of house, right? It really doesn't, pre-qualification really doesn't mean anything because there's been nothing verified, right? And so that's another important thing to keep is that if you have just a pre-qualification where it's like I haven't pulled credit, I haven't done anything, I haven't verified any information just based on what they told me, here's what they qualify for. It's nice to know, but you can't actually use that once you're out and making offers on homes. If you give that to a seller, they're going to be like, this isn't worth the paper it's written on. This tells me nothing about whether or not this person can actually close the deal. What you want to have is a pre-approval. Right, you want a pre-approval because a pre-approval shows that they have had that information verified. That means that lender has likely laid eyes on their W-2s, their pay stubs. They pulled their credit. They've looked at all that information, and based on that verified info, this person is pre-approved for this particular item. Now, again, that's a pre-approval. Sometimes people kind of take that and run with it and say, oh, we got the loan, we're good to go. You don't have a loan yet, right? You still need to go through the process of having it underwritten. You still need to do a full loan application and all that stuff. But if you can get a pre-approval from a quality lender who knows what they're doing, who knows to ask the right questions, that is going to be a great thing to set you up to not only make sure that you're fully prepared going into it, but when you're making offers, a seller is going to look at you more favorably than someone who just has some random pre-qualification letter. Now, there are some banks and institutions out there that refuse to write the words pre-approval on their letters. Like they will only write pre-qualification on there. If you come across a bank or an institution that refuses to write pre-approval on that letter, it only say pre-qualification, then the next best thing would be for you to have some verbiage in that letter stating that they pulled the credit and that they verified your income and pay stubs or whatever tax returns or things that you turned into them. You want to have something showing that like, hey, I've at least pulled the information and verified the info to say that they're pre-qualified, right? That if it doesn't say pre-approval on there, at a bare minimum, you wanted to say something about them verifying the info on there so that you're taken more seriously when you submit that. they need all that information on there as well. You want to make sure that they can tell you everything that they can tell you everything they need to know, and they need to be able to have a full, clear picture of exactly what you are making on a year-to-year basis. Also, they need to be able to see a couple years back at least, right? There's some times where you might have a side job or a part-time job that you are factoring into your quality or your eligibility for that loan. Sometimes they have rules in place where it's like, hey, if you haven't had that side job or that other income coming in for a certain amount of time, we can't count that towards your eligibility for the loan, right? And so those are all important things that you need to have discussions with the lender. And so make sure you tell them your full financial picture, right? You want to make sure that they know everything about it, right? If you're self-employed, if you have a side job or things that you do to kind of make funds or make ends meet, you're factoring that into your equation. Again, share that with the lender to make sure that all of those funds can be accounted for in making sure that you qualify for that particular loan. You don't want to have any surprises after you go under contract on a home and after you've already spent money doing inspections, on appraisal. If you're in our state, if you spent money on a due diligence fee, all those funds that are non-refundable if the deal doesn't work out, you want to make sure that those things are as protected as possible. And the best way for you to do that is for you to make sure that that lender has as much information ahead of time to make sure that there aren't going to be any surprises and that you fully qualify for that loan. In addition to your income and tax statements, all that stuff, they also need to see the assets that you have on hand, right? Your investment accounts. If there's anything like that that's out there that you have on hand, they want to be able to see the full financial picture. I'm going to tell you right now, do not hide things from your lender. They need to be able to have a full, clear picture of how much money you have coming in, what you're spending, what your credit is looking like. Do not try to hide anything from them, because I guarantee you, once they start digging, they will find it. We've had plenty of times where people try to move funds over or try to change things over here or try to park some money over here for a little while. I guarantee you, they're going to be going through your finances with a fine-tooth comb, and whatever things you tried to keep out or you tried to hide from them, essentially, they will find those things. Those things will come to light, and it's going to mess up the loan and cause you to not only lose out on the house you wanted, but also lose all the funds you spent up to that point. So make sure that you are fully putting out everything out there, right? All the money that you're making, any assets that you have, any money that's out there, they need to know about it up front to make sure that you are protected in that situation, right? Same thing goes for if you have any obligations outside of your typical debt obligation. Like, let's say you had got divorced and you have alimony payments or child support payments or anything like that. You want to make sure you bring that information as well to the lender to see how that factors in, right? We've had some stories of people in the past who normally they would have qualified 10 times over to buy that house, but because of their alimony payments, they no longer meet the threshold to be able to qualify for that loan, right? So these are all things that you need to be able to keep in mind and bring to the lender and present to them to make sure that they have everything in line and in order. VA loans, right? Like I said, if you know that you would qualify for a VA loan, you need to bring the documentation proving that you're eligible for that program and have all that set and ready to go, right? So it's really just making sure that you can account for all the different income sources that you may have, any programs that you may qualify for. You may want to know those things up front, right? And a lot of times that can also help you too, right? You want to be able to see if there's something that you qualify for that you maybe didn't know about as a result of sharing certain income sources or certain jobs or careers or companies that you may work for. That lender, especially the good ones, are going to make sure that they go through and look and see if there's any way that you can benefit from a particular program or a loan option that's out there and present you with the best thing that you have available, right? Another thing that you need to be prepared to talk with them about, at least on a surface level, is where you plan on buying, right? Because that is also going to impact what your costs are going to look like, what factors are going to play into where you're buying, like what type of house are you planning on buying? Are you buying a condo or are you buying a single family home, right? If you're buying a condo, we need to account for the fact that your HOA dues might be 10 times higher than some of the single family homes that are in that area, right? And that's going to impact affordability. If you are buying in a different town or a different city that might have different tax rates, that's going to impact it as well, right? If you're buying in Chapel Hill, that's going to have a completely different tax setup than buying in Raleigh, right? It's going to be a lot higher in Orange County. And so all these things you need to be able to have a conversation with them, at least to kind of give them an idea. You don't need to have the exact house picked out and everything like that. But if you can give them a general idea of what you're looking for, again, that's going to help make sure that you are not hit with any surprises and that you have a pretty clear understanding of what your obligations are going to be in purchasing this home, what the bottom dollar is that you're likely going to need to bring to the closing table, what your monthly payments are going to look like. You want to have a clear picture of all that. And the more information you give them, the more that's going to help. And then one last word of caution I like to give whenever I'm talking through all this stuff is I always like to prepare my clients for the fact that I do not know or do not care to know all the information or the confidential information that you're sharing with the lender. I can't say that's the same for every realtor out there, but a lot of us, we really don't care what your credit score is. We don't care about that random gambling debt that you had. All we care about is whether or not you qualify for that loan, and if so, are there going to be any issues with you being able to close that deal, right? And so a lot of times I'll tell people, hey, I don't know the past income or credit scores of any of my other clients. I tell them, hey, you go talk to the lender, put your skeletons out on the table, let them know whatever things you got going on. They will come out. They're not going to come and talk behind my back or behind your back and say, oh yeah, they got this going on, they got that. We don't do all that. All we do is just say like, hey, go share the information with the lender. The lender's going to come out and say, hey, they're good for this number, or hey, they just need some things that they need to work on. We'll come back and revisit in a few months and see how things are looking. Right. That's the best way that you want to do things. But I don't want you to be under the impression that your realtor has to know all the stuff about your finances. They don't need to know that. The only person that needs to know is the lender. Share that information with them and they can make sure, especially like I said, if it's a lender that was referred by your realtor, that's someone that they know that they can trust that they're going to do the right job of the questions. Now, if you come in and you say, hey, I found some random lender online, or I found someone that I think was good, whatever, we might have more questions, or we might want you to talk to someone that we know and trust, because again, we've had a lot of deals situations where we've been burned or had clients that messed things up along the way. But more than not, we want to make sure that you're taken care of and that you have a clear understanding of where you stand financially. And so that's just giving you a little take of like what things are expected of you and what you can expect in that initial meeting. It never hurts to have that conversation as early as possible. The earlier the better, and being able to prepare for what you need to expect and what you need to work on. But those are all things to kind of prep for your first mortgage meeting. If you ever have any questions, I'm always here to talk further with you. But I hope that you have a wonderful day. I'll talk to you next week.